Happy Friday. And just like that, the dip in interest rates was short lived. As we know, last week we touched on the 30-year fix 6.71. Well, this morning we open at 6.82. And yes, does it sting? But given the recent run in economic news, run on tariffs, all the volatility within stocks, it is really of no surprise. And as I've said before, yes, I am still a firm believer that we will see lower interest rates this year. The path to those lower rates is going to be rocky. They are not falling in a straight line like we're seeing here today. With that said, let's jump into this week because we've got a lot to cover and I want to consolidate it as much as possible. We've got the all important PCE, personal consumption expenditures, some things to be aware of. There's been some monumental changes around how FHA loans are going to be originated, as well as special SPCP, special purpose credit programs. And then lastly, some call to actions for our agent partners. So let's dive into it. PCE, personal consumption expenditures. There was a ton of anxiety walking into this report. As we know, PCE is the Fed's favorite gauge on inflation. Rewind CPI earlier this month, Consumer Price Index report. There, where yes, we saw inflation decline, there were components within that report that directly tie into the reading for PCE, personal consumption expenditures, which showed an increase. So walking into this report, there was a tremendous amount of anxiety that we were going to see PCE rise. Well, we did. But there's good news. So first things first, month over month numbers, market was expecting 0.3. We saw 0.4. Year over year, we were expecting 2.7, yet it went to 2.8. So still not in line with the Fed's target of 2%. So yes, a miss. And typically a miss of this magnitude, or a miss really of any magnitude where it goes higher, mortgage rates would have been obliterated. Well, we're not seeing that right now. So it leads the credence to, hey, yes, this miss was there. However, given the declines in inflation, what we're seeing with true inflation, talks of tariffs, and the fact that it wouldn't be transitory, it's a one-time hit to inflation, market is digesting this well. So here for the time being, where yes, we got a miss this morning, that miss is not putting a ton of pressure on mortgage rates. So hey, it's a victory nonetheless, and we're going to take it. So next things that I want to cover on are some adjustments forthcoming to some unique, or not unique, some specific loan programs that I know we've all taken advantage of. So first things first, special purpose credit program. These loans are typically delivered to areas that are underserved, low income, and they incentivize those programs through lenders with typically anywhere from a half to 0.75% rate improvement. This is subsidized on behalf of the housing agencies. We've used a tremendous amount of them throughout Southern California as well as other parts of the country. Well, with the drive of the new Federal Housing Finance Agency, FHFA, Bill Pulte, it looks like this program potentially is under duress. So it likely will go away. There's been no direct mention to it, but given the recent actions, it's likely that this program will sunset. The next big one, FHA, Federal Housing Authority, or Federal Housing Agency Administration. This program awards purchase of a primary residence, 3.5% down. Don't need to go into specifics, but typically, if you had a social security number, permanent resident, what have you, you could gain access to this program. Well, under direction of FHFA, they are no longer going to be extending this program for non-residents. Effective May 25th, non-residents will no longer have access to FHA. So where, yes, we've provided a tremendous amount of these financing options to different individuals, all walks of life, this is definitely a big change, and really where you can get incredibly proactive, create opportunities in the now, is getting on the phone to any clients that were utilizing the SPCP program, the one for underserved areas, as well as the FHA program to non-residents. May 25th, on that day thereafter, when a case number has been pulled, which is really the trigger for a new purchase, that program will no longer be available to those individuals. So really the opportunity here is to reach out to your database, individuals that may have been using those programs, and letting them know that, hey, now is the time to act. As always, if you're running into challenges, you need help strategizing around connecting with your database, we would love the opportunity to assist. Call, text, email. We're here and happy to help. Let's make it a wonderful day.